Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, April the 8th, 2013. Before we get on to tonight's market analysis, I wanted to bring your attention to some changes that were made to the website over the weekend. We altered some things so we could fit more stuff on here, so it's just been moved around a little bit. You can go on down here. Before, we used to have the actual my personal charts here where you can see them. They're annotated every single night with my stop loss limits and so forth and so on. That used to be here on the home page. We've moved that, and it's now over here under the market section. Nightly market analysis videos and then market charts. That's what they're at. And also, just a little while ago, we updated the Dow 30 alerts and issued an alert there, so you can check that out as well. Let's get on to the markets. Okay, today we're going to look at the Wilshire 4500 for a reference, and then we're going to go look at the Dow and the S&P 500. The Wilshire 4500 looks like all the other major market charts that we have been tracking for you guys, and this one here, you can see this massive little uptrend line here. It's always important to draw that on the long-term charts. Again, these are long-term charts. There's 2 years. Each one of these candlesticks represents a week worth of activity. And in this particular case, you can see that we have closed as of last week below that uptrend line. I mean, we broke that uptrend line. Therefore, we expect in any bounce here, we find resistance on that uptrend line. So that's important. Again, we talked about this last week. We had the bearish divergence in play. High point here on the ultimate oscillator. Lower high here, sloping down. At the same time period on the chart, price activity was high close here, higher close here, so you were sloping up. It just indicates that you're not sustainable and it's going to break down. It eventually did. We saw this here, and we were short here. There's 2 other charts that have not actually completed this phase, and yet we're still short them as well. So they're the most concerning for me right now, the ones that are most likely to get stopped out of if we continue to move to the upside. So we'll be watching those today. The first one we're looking at will be the SPX, or the S&P 500 Large Cap Index. You can see this massive uptrend line right here, and then we actually increased the volatility or the momentum to the upside here, and we just drew another trend line right here, a little small one, indicating that this is a minor uptrend line here. And we haven't closed below either one of these, and therefore this is still in the uptrend. I'm trying to call a top here and say, you know, stick the fork in, it's done, because we had the bearish divergence, so forth and so on. But I could still be early here, so this is one of the 2 charts that could cause me problems and get me stopped out of my short position here. However, I want to point out, if I'm stopped out of my short on the S&P 500 or the Dow Jones Industrial Average, that doesn't mean that I'm like, oh, okay, I'm wrong, I'm going to go long. You don't do that. I actually posted an interview with Mark Faber on Facebook. I'm on the PerfectStockAlert.com Facebook page, and you can watch that video. He basically says the same thing. If you continue to rally the upside, you only increase the odds of a major market crash. And so it's important that you understand that just because your stop may get stopped here, you may get triggered that stop loss limit and get knocked out of that short position. It doesn't mean you're wrong. It means you're early, and that's a big important factor there to keep in mind. In this particular scenario, I'm still in a short position. I'll show you the short-term chart in a moment. But again, I want to point out this is one of 2 that are not actually breaking down at this moment. Looking now at the short-term time frame, the 3-month daily candlesticks for the S&P or the SPX, the S&P 500, you can see the stop has not moved. I've not advanced the stop. It's still set off the high. As long as we remain below this high point here, that's fine with me. That's what's supposed to happen. If we actually come up here and break it out, I'll be stopped out, and I'll move to cash on that position and wait for another entry opportunity on, again, the short side, because as I've shown you on the long-term chart, you have the overbought conditions on the ultimate oscillator, you have the bearish divergence situation. The only thing you don't have is the timing, the actual snap of that uptrend line. So we'll keep an eye out looking for that. If we get stopped out, look for another entry opportunity on the short side. Again, do not turn bullish just because the market continues to press higher and higher and higher. That's not how this works. Looking now at the Dow Jones Industrial Average, you can see the same basic overall setups going on here. The slow point here is where we start the uptrend line off the next low point here, right here. So you can see that we've got this little uptrend line develop on that major trend line there. And then we have a minor one here as well, showing that we have increased the volatility to the upside here. And now we're starting to see the first signs of a bearish divergence form here in the long-term chart. You can see this high point here on the ultimate oscillator, and it was lower than the previous one, so you're actually sloping down. This candlestick is still forming here. It's the weekly candlestick, so we don't know that we'll actually end as we're seeing it now. This may actually sell off, so we don't know. But right now, we're just looking at this point here, and then this point right here. You can see that it's trending up. Same time period on the ultimate oscillator starting to form that bearish divergence situation that we look for when we see froth developing in the market, and then we start to wait for that snap of that uptrend line, and then you get short. Now I've already shorted it on this particular case as well as the S&P 500. because all the other markets have already broken that trend line. So I'm anticipating these guys are going to follow suit. But if I'm too early and we get stopped out, then just look for another entry opportunity on the short side. Again, do not buy this market. You're up over 2,000 points without a good decent correction or decent pullback, and so that's something that you should be taking note of. If you break out and you continue to move higher, you're only increasing the potential of a massive crash. So it's only more reason to get short, not less. Okay. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.